What is up, everybody? This is Max with Trades and Gains, and today I present to you our 100th market recap episode. I want to go ahead and say thank you to everybody who has ever subscribed. I want to say thank you to the Money Machine newsletter for sponsoring this podcast. I want to say thank you to Investor Central Club for giving us a data partnership. I want to say thank you to Zach Morris for fully endorsing us. I want to say thank you to Keone Mars for giving me the opportunity to run this channel. And I want to thank Los, MJ, aka Parody Parker, Parker Parody. I want to thank .com Parker, printing tendies. There's so many people I can just go down a list of thanking. But we're not here for that today. We're here to talk about the market recap. And you know what? We'll do a 100th episode stream tonight. So go ahead and tune in on X so you can get a part of that. Anyways, let's go ahead and dive into our news for today. If you're wondering how the markets reacted to fresh jobs data and the latest tariff drama between the US and China, guess what? You're in the right place. But if you're here, you're already in the right place because you know I'm here for the people. I'm here for you. Don't forget to hit that like button, subscribe for more updates, and let's go ahead and just jump straight into this. So US stocks closed higher today, and this was led by big tech. The Dow Jones Industrial had a gain of 0.3%, the S&P 500 had a 0.7% gain, and the Nasdaq composite was our belle of the ball, winner of the day with a 1.4% gain on the day. Investors are processing two major events with this. China's swift response to new U.S. tariffs. This added fresh volatility to the market. And two, new jobs data. Job openings declined more than expected, signaling potential shifts in the labor market. And one thing to know about jolts, my people, is if jolts come in under, it's bad for the economy and the job market, but it's good for the stock market. If jolts beats, aka job openings beats, it's going to be good for the economy but bad for the stock market. And the reason for that is because if we beat, that means companies may have to pay more wages to entice workers to come work for them, right? So therefore, inflation would go up, which means the Fed is going to have to delay rate cuts even more. So just to give you a little perspective of if you want to trade jolts next time we have that report come out, that's kind of the way you can look at it. Anyways, moving on. Despite global uncertainties, today's rally shows investors are cautiously optimistic. But what's driving this momentum? Let's dig a little deeper here. So President Trump announced an extra 10% tariff on Chinese imports, effective immediately. In response, China fired back with 15% tariffs on U.S. coal and liquefied natural gas, and 10% duties on crude oil, farm equipment, and even some automobiles. Now here's the twist. Some analysts see China's response as surprisingly restrained, which could open doors for compromise. Trump hinted at talks with President Xi within the next 24 hours. Could this be the start of de-escalation? Only time will tell, and don't worry, we're going to cover it right here on Trades and Gains. Now, why does this matter exactly? Because tariffs can ripple through the economy, raising costs for business, leading to higher prices for consumers, and even affecting the global supply chains. This tug of war between the two world's largest economies isn't just political drama, it impacts your portfolio and your wallet on the day-to-day. Now, we also had some job openings, and those dropped to 7.6 million. Again, that's our JOLTS report, and that's been the lowest since September. This decline has economists absolutely buzzing. Good news, a cooling market might ease inflation concerns. Less demand for workers can slow wage growth, which helps control rising prices. And the bad news, it could signal slowing economic growth. Fewer job openings might mean businesses are bracing for tough times ahead, especially with these tariff talks constantly being in the head of the news. Now, the Federal Reserve is watching closely. A stable job market might delay interest rate cuts despite stubborn inflation. So if you're betting on a March rate cut, you might want to rethink rethink that strategy. And the big picture here is the labor market is like the heartbeat of the economy. When it slows, it signals that businesses are cautious. But when it's hot, it can fuel inflation. Finding that balance is the main key for us here. Now let's talk about some of our big movers for today. We had AMD, which was basically tanked after market because they had horrible AI guidance. Quite frankly, I don't know why people buy into calls for earnings, because they literally will come out and be like, we released a GPU that nobody wanted for gaming PCs and an overpriced handheld that is literally twice as expensive as a Steam Deck and maybe gives you the same performance. So you're just paying for the logo at the end of the day. They need to get their shit together. But let's move on after that. Snap soared 15% after crushing earnings expectations. More daily active users equals more revenue, plus strong ad sales hint at resilient digital economy despite broader market concerns. Alphabet dropped over 7% due to weak cloud revenue. Their earnings missed the mark, especially in cloud services, which if you watched our Google What to Expect, that was a huge aspect of that call and a crucial growth area for the company. I guess the competition for Google is heating up, so look out for that. In Chipotle, they fell 6% after missing sales estimates. It seems like not even burritos are inflation proof. Granted, Chipotle's been raising their prices ridiculously, so like, what did we expect here, especially with inflation going up? And honestly, this is an insight into cautious consumer spending and food costs as well. So here's what's on the radar for the rest of the week, though, folks. We have upcoming earnings. We have Disney, PayPal, and Pfizer all set to report. Will they beat expectations like Snap or stumble like Chipotle? Earnings gives us a snapshot of how companies are navigating economic headwinds. Also, when we look at earnings from more consumer-based products and consumer-based driven stocks, it gives us an insight into how the consumer and average person is doing, right? And then the next thing, tariff talks. Keep an eye on any updates from Trump and President Xi's potential call. This could shift market sentiment overnight, affecting everything from tech stocks to commodities. And finally, the Fed signals. Any hint from Federal Reserve about interest rate policy will be a game changer. The Fed's decisions affect borrowing costs, investment flows, and overall market mood. Now, why does this matter? These events can trigger market volatility, creating both risks and opportunities for investors. Stay informed, stay ready. And that's your quick recap for today, folks. If you found this helpful, go ahead and fist that like button, punch the subscribe for more market updates, and drop your thoughts in the comments. What is your take on the tariff drama? Are we heading for a trade war or a truce? Let's go ahead and discuss it below in the comments, and I will see you guys for episode 101.